So loss from within the head. So within the head means the loss from one source of income can be set off from the income of another source within the same head. So suppose if the SSC has two types of business, one is electrical business and the other one is cloth business. In the cloth business, there will be a loss. That loss can be set off from the income of electrical business within the same source because the head is business income. Similarly, in the case of house property, a loss from one house property can be set off from the income of another house property. So that is within the source. But some exceptions to this provisions. Such exceptions are speculation loss. Speculation loss can be set off some speculation gain and a long-term capital loss. This is exception to this rule and loss under the head loss from owning of horses for race purpose is also exempted and also it treated as an exception to the above and the loss from a specified business income under the section 35 AD is also exception to within the head. So we have to discuss the exceptions. The speculation loss can be set off from speculation gain. It cannot be set off any other business income. Even the speculation business even the speculation is a business income. It cannot be set off another business or another regular business income. But the loss from regular business income can be set off from speculation gain, but the speculation loss cannot be set off from regular business income. That is the exception to within the head. And the loss from owning of horses or maintenance for race purpose cannot be set off winning from races. It can be set off only from the same source even the income is fall under the head under section 56 subsection 2. So but similarly that long-term capital losses, the long-term capital loss can be set off from long-term capital gain, but it cannot be set off short-term capital gain, whereas the short-term capital loss can be set off from short-term capital gain or long-term capital gain, but long-term capital loss cannot be set off from short-term gain or any other income. So these are the exception to within the head. And next, the second provision is outside the head. That means income from loss from one head of income can be set off from the income of another head of income is known as set off losses under outside head. That is interheads. So loss from house property can be set off from any other head of income within the same assessment year up to a maximum of 2 lakh rupees. 2 lakhs rupees. But it cannot be set up up to 2 lakh rupees. So any income can be utilized to set off the house property loss. Similarly, the income from business, that is a business loss, can be set off any other head of income except salaries. So except salaries. So that is interhead. One head of income that is loss from business income can be set off from any other head of income except the salaries. And next, a loss from owning of horse races cannot be cannot be set off from any other head of income under the income from other sources. Loss under the head house property can be set off from other head of income. Otherwise, it can be carried forward. Set off losses can against any other head, it is called interhead set off losses. No loss can be set off from casual incomes. No loss can be set off from casual income. Casual incomes means that is winning from lotteries, income from crossword puzzles, and other in the nature of gambling. these incomes cannot be used to set off the losses. And capital losses, the short-term capital loss can be set off from short-term capital gain as well as long-term capital gain. The long-term capital loss can be set off from long-term capital gain only. Loss from yes, loss from a source whose income is exempted, the loss from such a loss from one source whose head of income is exempted under any provisions of the act, such loss cannot be set off any taxable income if any. So that is a set off of interhead losses. Then next, another category is set carry forward and set off losses. Set carry forward and set off losses. If any loss related to any previous year or assessment year cannot be set off either within the head or outside the head, the same can be carried forward and set off in succeeding previous years or assessment year. Such a loss can be carried forward to future years, future previous years for set off against the incomes is said to be set off and carry forward and carry forward and set off losses. So we have to discuss these provisions. And the first head of income is income from the head salaries. There will be no loss under the head salaries. As such, there is no question of carry forward losses. Income from the next one is a loss from house property. It can be carried forward for 8 succeeding previous years and can be set off from house property income only. So the loss from one house property can be set off another house property income or any other head of income the same assessment year. If not adjusted, it can be carried forward up to 8 succeeding previous years. Once carried forward, it can be set off from house property income only. And next, the business loss. In case of business, the uh, carried the loss carry forward for 8 succeeding previous year and can be set off from business income only. So the loss from business can be carried forward 8 succeeding previous years and can be set off from business income only. And the set off from business income included speculation gain. The speculation loss can be carried forward for 4 succeeding previous year and can be set off from speculation gain only. But whereas the speculation gain can be utilized to adjust the loss from regular business. And the loss from discontinued business allowed to be carried forward and set off up to 8 years. Loss from discontinued business also can be carried forward and set off for 8 succeeding previous years. Loss from a speculation business under Section 35, specified business under Section 35 AD, it is also allowed to be carried forward but restricted to set off from the same source of income. The same source of income. And unabsorbed depreciation. The unabsorbed depreciation means according to Section 32 of the Income Tax Act, the depreciation calculated as per prescribed rates, it is allowable depreciation. It is allowed to the extent of available income. So if the allowable depreciation is more than the available income, such amount is called unabsorbed depreciation. The unabsorbed depreciation can be carried forward and set off either business income or any other head of income till it is completely set off. Till it is completely set off. The next and capital losses. Short-term capital loss can be carried forward 8 succeeding previous years to be set off from either short-term capital gain or long-term capital gains. And the long-term capital loss also can be carried forward 8 succeeding previous year and can be set off from short-term, long-term capital gains only. Loss from owning of horse races. The expenses incurred on owning or maintenance of horses for race purpose. Generally, it is an expenditure only, but it is covered if the horses of the horses won the prize in races, then the horse owner will get a certain percentage of prize money as stake money. Out of such a amount of stake money, he covered the loss. That is known as the loss from maintenance can be set off from the same source of income. Otherwise, it can be carried forward. It can be carried forward 4 succeeding previous year and can be set off from same source of income. So these are the provisions. In case there is a carry forward business loss as well as unabsorbed depreciation, then following order should be followed. Firstly, the current year depreciation is allowed from the business income. Later, the secondly, brought forward business loss can be set off, and thirdly, the unabsorbed depreciation can be set off. So these are the set off and carry forward provisions. So these provisions. These set off and carry forward provisions are made to the total income, to the gross total income, then we get taxable taxable income. Therefrom, some deductions are allowed under Section 80C. So these are the provisions of set off and carry forward, which are dealt in Income Tax Act from Section 70 to 79. So, okay, thank you.